We have a quorum. It's 8:30. This is the Bills Committee on Banking Amendment Bill 2017. This is the first meeting. We will elect chairman. Mr. Wong Ting Kwong, I nominate Mr. Ronick Chan. Do you agree, Mr. Chan? Yes. Any other nominations? I'll count to 3. 1, 2, 3. Mr. Chan, you are elected chairman. Members, do you think we need to elect a deputy chairman? No? All right then. Let's invite the administration to come in. Perhaps I will give its introduction. We have the Deputy Chairman, Mr. Sun of the FSTB, PAS, Ms. Cheung, and Assistant Secretary, Mr. Yim, CEO of Hong Kong AM, Mr. Ho, and Ms. Hui, and Mr. Edmund Wright, and Senior Manager, Banking Policy, Mr. Zhang, and from the DOJ, Senior Assistant Law Draftsman, Mr. Lam. Mr. Sun, are you going to take us through the paper? Yes. The government proposes to amend the banking ordinance to implement the latest standard to enhance the ability to respond of banks. First, there is the standard of recovery standard. G20 set some standards in 2014, that is to enhance banking ability to respond. When they are under severe stress, they can trigger the recovery plan to reduce risk. However, currently the banking ordinance does not explicitly require banks to put in place recovery plans, so we need to provide for the empowerment of the monetary authority to require authorized institutions to maintain recovery plan. The other one is in relation to the change of limitations on financial exposures. Under the banking ordinance, authorized institutions will have to set limitations on financial exposures to avoid risk accumulating over just a small area. Basel in 1991 set financial exposure limits. In April 2014, in relation to measuring and controlling large exposures, Basel promulgated a new supervisory framework. Hong Kong has the duty to conform to the latest international standard and update our regulatory regime before 2019. In order to do that, we need to amend the ordinance and to repeal obsolete provisions and put in place a new replacement provisions, where we consider that the replacement rules may change according to international standards. So we are going to repeal the provision in the principal legislation and empower the Hong Kong MA to impose requirements. That is in relation to, that is in line with disclosure and liquidity. So all these are to enhance the bank's ability to respond to stress situation. We have consulted the banking sector, and they've expressed their concern. This bill will come into effect when it is endorsed, and in 2018, the Hong Kong MA will put in place the limitations which will be implemented in 2019. That's my presentation. Thank you. I now ask members to express their views and ask questions. First, Mr. Kenneth Leung, 5 minutes to start with. Thank you. Chairman, I want to ask you, you're from the banking sector. I think there is already a consensus in the banking sector, or do we need a public hearing? That's the first question for the chairman. Second question is for the administration. When a bank is under stress, there is a need for them to prepare a recovery plan and to implement it. Are there definitions in this bill or in this ordinance to define under stress? Is it for the bank itself to decide? Or do they need to talk to the Hong Kong MA? Thank you, Mr. Leung. Well, I am the chairman. Let me say, first of all, that the administration has gone to the Hong Kong Association of Banks to seek their views. Views were expressed, and through the Hong Kong AB, they are forwarded to the FSTB and the Hong Kong MA. Well, the Hong Kong Association of Banks is a representative of the sector. I will leave it to members to decide whether to hold a public hearing. Well, if you would like to invite individual banks to come to speak to us, that's fine. That's for members to decide. Perhaps after we have heard from the administration, we will ask members for their views to see if they would like to have a public hearing. Mr. Soon, would you please answer Mr. Leung's question? Well, I will first answer, and then I will defer to Mr. Ho of the Hong Kong MA for more details. This bill is to empower the Hong Kong MA to ask authorized institutions to devise a recovery plan covering different options. When they are under stress, these may be triggered to ensure stability in the financial system. When it comes to details, I will defer to Mr. Ho. Thank you. Mr. Ho, please. Thank you, Mr. Leung, for the question. And indeed, it's mentioned in the bill that when banks are under stress, they will have to implement recovery measures to maintain their financial resources and viability. What is under stress? Well, when it comes to stability indicators, they are about stress faced by capital and liquidity. There are many different scenarios. Say, for example, loss suffered from loans, loss suffered from securities. When it comes to liquidity, there are also many scenarios that put them under stress. When we drafted the bill, we have not made an exhaustive list of all the different scenarios. So the highest standard is that when it is stressed, and they will have to implement the recovery plan. That targets mainly stress on capital and liquidity. That results in loss of financial resources, and it may adversely affect the sustainability of the operation of the banks. Now back to the public hearing. I'm a representative of the sector. I don't think there is much need because their views have already been reflected through consultation with the Hong Kong AB. I would like to ask members, do you think there is a need for us to have a public hearing? Mr. Wong Ting Kwong? I ask to speak. And also in response to what you have just said, Chairman, about a public hearing. This is done as per the requirements of Basel. Hong Kong has to legislate to meet international standards. I believe that the administration is in close liaison with the sector. And I believe that they have looked into the bill. So there is no need for us to have a public hearing. Apart from the banking sector, those that are not from the banking sector may not be very familiar with the operation of banks. For general views, I think, well, they are more or less the same. So I'd like to maybe hear more about the communications with the banking sector. Ms. Zhang? Yes. When we formulated this bill, we have gone through 2 rounds of consultation. First is the general direction. We have consulted the sector. In the second round, we have shown the proposed provisions to the sector. They supported our proposals. We are going to implement 2 sets of international standards, which is for the long-term international standards put in place. The sector supports the general direction, and they have given us very valuable views when it comes to individual provisions, say for example in the implementation of recovery plans and also definitions of some technical provisions. Well, the proposed bill has incorporated views from the sector. They have looked through them and they have not expressed any objections. Mr. Chen Kim-po, are we going to express our views or are we going to ask questions? You may ask questions. You're the second in line. First, about the public hearing, I agree with Mr. Wong Ting Kwong, because only the banking sector is affected, and if they think there is no problem, there's no need to have a public hearing. And in relation to the recovery plan, actually, Hong Kong MA has required banks to put that in place. Why do we need a piece of legislation? And I think the penalty is quite severe, 5 years. I declare that I am an INED of the Bank of East Asia. So I see that board members, management may be penalized. So, well, how did you set the penalty? 5 years, which is quite severe. Ms. Zhang? I thank Mr. Chen for his question. Yes, he is right. The Hong Kong MA has already required banks to put in place a recovery plan. They now rely on Hong Kong, the banking ordinance, in relation to the provision of information collection. A lot of banks have already submitted their recovery plan, but we do think that this power can be more clearly defined. This is the requirement of the Financial Stability Board. All jurisdictions, member jurisdictions, will have to meet all these standards. The power will have to be clearly delineated. And in order to enhance transparency and certainty, we think there is a need through this bill clarify actual requirements in the bill so that banks won't have any doubts when they put these requirements in place.
Second question is about penalty. When we determine on the penalty, we've already made reference of the penalties under the banking ordinance, and they are consistent. Under the banking ordinance, should there be any accidents, incidents, or non-compliance, the person in charge of the AI will be held responsible. And the definition of the person responsible would be the directors and the manager of the bank. For the recovery bank, when the bank is really under stress, there's not very much the bank can do. You talk about recovery. We're talking about a very serious financial position, and the whole market condition could be very bad, and the assets of the bank are also in a very poor state. Have you taken all that in consideration? And things that you can normally implement in a normal market condition may not be feasible in an extreme scenario when the market is very confused. So in that case, how can you ensure that the bank can really implement all these recovery measures? I'll try to respond, and my colleagues may supplement. For the recovery plan, the principle is prevention rather than cure. We don't want to wait until the market has changed to such a scenario that is beyond control before we take action. So it's prevention rather than cure. That's the principle. So for the recovery plan, every AI and every bank, the plan is tailor-made according to its own circumstances, according to its own capital and liquidity level, and also the resource allocation within the institution, so that it can come up with its, an appropriate recovery plan. In the process, we will work closely with the sector. There have been a very long period of consultation. If we note that there's any deficiencies in the recovery plan of an AI, the MA will ask them to make amendments to ensure that the recovery measures are really feasible and can be implemented. So through such communication and consultation, we can prevent the occurrence of a scenario Mr. Chen suggested, that is, that the market has, deteriorated to the extent that it's beyond our control. The whole purpose of the recovery plan is exactly to tackle to prevent such a scenario. I'd like to ask Ms. Kit to also supplement. You're saying that the recovery plan should be tailor-made according to each AI, but if something goes wrong with market and different AIs are under stress, how would you deal with such a scenario, a worst-case scenario? Thank you. I think Rita already explained that we must first of all emphasize that the recovery plan is prepared by the bank itself. So the bank would be the party which best understands its own assets and the stability of its own deposits, so that it could come up with a recovery plan in case it is under stress. As for the Bureau, we would of course vet these recovery plans to see whether they are feasible and whether or not the assumptions they made are too optimistic. For example, in the recovery plan, there might be certain elements where the bank may need to dispose of some of its assets in its balance sheet. In the recovery plan, we will make reference, we will consider, we'll look at the way the bank, that is, when the bank disposes of its assets, would there be any haircuts? That is, when the bank is under stress, it may need to, within a very short time, while the market condition is very severe, to dispose of these assets, and it can only dispose of the assets at a haircut. So we would look at all these factors. In the past, when we look at situations when the market was under stress, we took into consideration the reality of the market. So we'll look at the assumptions in the respective recovery plans to see whether or not they are reasonable, and if not, we'll talk to the bank concerned and ask them to rectify their assumptions. Ms. James Toh. Thank you. Regarding the public hearing, I would like to have a public hearing. Of course, the bank is the major stakeholder, but the Consumer Council and other relevant stakeholders may have some, inputs for us that we have missed, or certain, consumer groups which are concerned about banking may also have, comments. The question I'm going to raise is similar to Mr. Chen Kin-Paul's. I'm not concerned about the severity of the penalty because the interests of many stakeholders are involved, so the responsibility is very onerous. If Mr. Chen Kin-Paul thinks that the penalty is too onerous, and he's not really made that point, but if so, I think we have to listen to the views of other corporates and statutory bodies. That is, so we have to discuss whether or not the penalty of 5 years imprisonment is too severe or too lenient. Right now, you require the AI to come up with a reasonable recovery plan, and failure to do so will result in imprisonment. So my first question is this. You talk about a plan which may involve disposal of assets. Could you give me a typical example? You don't need to name any banks. For example, what are the things the AI would need to do, and under what circumstances, what will be the discount, you can perhaps give us a typical plan. I mean, and at least you should give us a sample. Otherwise, I think you should give us a sample to show that if the bank, do this or fails to do this, then the person responsible will be in prison. So could you give us such a plan, a typical plan? It could be, a sample or, a genuine case. I hope it will be a genuine case. You can delete the names. You talk about the AI under stress. The question is, are you talking about an individual AI under stress or the entire market under stress? You're talking about two different scenarios. Let's say if there's a rumor that there's a bank run, all banks would not be able to stand that. Then of course the banks would need to help each other out. And even the government will have to, for example, pump cash into the system in order to prevent a bank run, because it's all boils down to panic. If that's the general market condition, so how can you really, salvage the market? Just imagine during the time of the SARS epidemic, I think the market dropped by 60% over the course of a few months, and there were very few transactions. People were not willing to go into the market, even if you want to dispose of assets. If everybody should have to come up with a plan, everybody will be disposing the assets. There will be, a panic, all right, a stampede amongst the banks to dispose of assets. And if you require the major shareholders to place, some deposit, let's say 20 million, you have to ensure that the banks will not go into default, even if you, otherwise, if you have $300 million there, of course it can help. For the small and medium-sized banks. Now, for the really large banks, I'm not too worried. If there are too too large, if they go, if they're under stress, everybody will be in a similar situation. I'm not too concerned about the smaller banks either. I'm more concerned about the medium-sized banks. I think you should come up with a recovery plan for medium-sized banks. Well, I think Mr. To raised quite a few questions. Mr. Zhang, Madam Zhang. Thank you, Mr. To, for your questions. After the meeting, we can perhaps provide members with, a template. But of course, we will not disclose the details of the actual recovery plan because it involves commercially sensitive information of the AIs. We cannot reveal the names, but we can show you the format. Now, if possible, I hope you can give us an example of a real, genuine case, but you can identify the names of all the banks concerned. We don't need the names, even the amount. You can just give us a ballpark figure. There are many medium-sized banks, so I just want to have an authentic example. Yes, we can certainly do that. Like regarding the content of the recovery plan. In order to enhance transparency, we've already provided for the framework in the bill. We're saying that the most important thing about the recovery plan is that there should be conditions for triggering the recovery plan. The plan is tailor-made to the bank's condition. So in the bill, the recovery plan will stipulate that should there be such a scenario, the bank will need to trigger the recovery plan. And when such scenario occurs, what are the options for the bank? And for each option, what will be the impact on the AI? And what is the procedure for triggering the recovery measures? And also, who is the person responsible? So there should be, a plan for communication that is other than informing the MA what is the procedure to inform the market. So for the recovery plan basically will follow this framework. The MA in its supervisory guidelines will also specify the format and the elements required. And in the light of the circumstances of each bank, the MA will talk to the banks and come up so that you can come up with a tailor-made recovery plan that will suit the conditions of the bank, at the same time complying with the requirements of the MA. Mr. To asks about the stress which applies to a single AI of the whole industry. We have already emphasized that the recovery plan is tailor-made because the capital level and liquidity level of each AI is different from others. Under the banking ordinance, for institutions of different scales, there are different requirements. So the recovery plan, therefore, has to take into consideration the scale, the nature of the business, and the complexity of the business of each AI before it is determined. So at the first level, we'll first of all look at the AI. We'll look at the conditions for triggering the recovery plan. And the plan will say that when this scenario arises, say there is insufficient capital, certain measures will need to be triggered. So this will depend on the condition in the bank concerned. Of course, if the whole market is under stress, then of course we will look at each of the AI's recovery plan to see whether they can all be implemented together. There's another question about penalty. You have emphasized that the penalty is reasonable. Well, I don't think she needs to answer that question. For the second round, Mr. Kenneth Leung. Thank you. I asked whether we need to conduct a public hearing. Looking at the bill, I think the investors and the consumers in general may be interested in this topic. So I think it would be best that the different banks and even consumer interest groups will have a chance to come and express their views. It could be a public hearing for half an hour, an hour. I hope we will be able to do that. I don't have a background in banking, although I do have some, understanding about financial affairs.
You talk about the recovery plan. As far as I understand from the background information, it's not a pre-approved plan. It's when there is a stress incident, the AI will submit the proposal and discuss with Hong Kong MA. Is that right? My understanding is not a pre-approved plan. Yes, there may be objective standards to be met because there are some objective standards set by Basel. If Hong Kong MA is to approve the plan, but it seems that there is no mandate for the Hong Kong MA to pre-approve or approve the plans, although they need to ensure that these plans meet all objective standards. So is an approval part of the requirement? And if Hong Kong MA has to approve these plans, well, if there is something systemic that happened in the market, just like what the Hong Kong MA said, say if there is a market collapse, well, you have to write off some proprietary market position. Say, for example, a drop by 15% in the market. Well, dozens of banks will have to write off a large sum of money. Say if it's a Friday, will they only compile a recovery plan on Friday? I don't know how long it would take. Say by Monday, there will be 40, 50 recovery plans with the MA, and you need to approve them, and it will take another 2 weeks, and the market situation has already changed by then. So I don't understand. How can you make sure that these plans work? My understanding is that it has to be pre-approved. Let's hear from Ms. Zhang. Thank you, Mr. Leung, for the question. We understand his concern. In order to allay such concern, we have to vet the recovery plan beforehand. Our requirements are for banks to maintain and revise a recovery plan, and they have to be submitted to the Hong Kong MA as well. The Hong Kong MA will look at the plan. If there are obstacles or inadequacies, then the Hong Kong MA may require the AI to revise them until the plan is feasible, practicable, and able to meet the complexity of different situations. So the plan is already in place before there is a stress event. And this plan will have to be vetted by the Hong Kong MA to be feasible. So it's not the case that, well, all of a sudden on Friday you will have to come up with a plan for approval. I understand then. So the requirement of Basel and what you have been doing, what are the differences? Because, well, there are some indicators and targets, and you have plans. So what is the actual requirement of Basel? Well, that is one of the requirements of the Financial Stability Board, the FSB. The requirement is that member jurisdictions will have to, in relation to AIs, make arrangements in law for recovery plan so that there will be preventative measures to stabilize the situation before it's too late. So banks will have to put in place a recovery plan. We follow relevant requirements of the FSB. In that, banks will have to maintain a recovery plan and set out measures that are feasible and practicable. Failure to do so may result in the Hong Kong MA enforcing the law. So my understanding is that you have been doing it, but there is no legal basis. And now that there is a piece of legislation setting out all the targets, well, we do everything with a legal basis. And in reply to Mr. Chan's question earlier, well, under the banking ordinance, the Hong Kong MA has the power to collect information, and through this power, banks are required to put in place recovery plan. But we think that we can enhance transparency and certainty. So we set out in detail and with clarity requirements of the FSB, and we've always have a legal basis. I would like to hear from Ms. Cheung for more information. That is, well, some certain people in the banks will have to be liable. And if the Hong Kong MA requires some addition and the banks don't agree with that, is there an appeal mechanism? Perhaps you can elaborate on that to give a more complete answer to Mr. Leung. This time round, we require the AI to prepare a recovery plan. Refusal to do so will result in the banks and senior responsible officers to be liable. That is right. Well, these requirements are in line with international standards and the standards in the banking ordinance. Well, what if the Hong Kong MA requires 10 more requirements and the bank said 7? Is there an appeal mechanism? Yes, we have a banking review tribunal. If the Hong Kong MA finds that in relation to the recovery plan, banks delay the implementation of the plan, which in turn affects financial stability and the viability of the AI, the Hong Kong MA may require the bank to immediately implement the recovery plan. Of course, the bank may lodge an appeal. They may make an application to the Banking Review Tribunal to review the decision of the Hong Kong MA. The tribunal will decide whether the bank will have to comply with the instructions of the MA. However, where there is a stress situation, it affects financial stability and then and in turn the bigger market. So there won't be a suspension of the instruction. Banks will still have to, in accordance with the Hong Kong MA, implement the recovery plan. Mr. Chan Kim Po, I want to clarify something. You need to understand that regulation of the banking sector in Hong Kong is quite stringent and is very sound. After a number of financial turmoil, you see that our banking sector is still stable. This is in relation to capital and liquidity. When there are problems, there will be a recovery plan, which is already in place. It's only a matter of when to trigger it. It's something that banks have already done it. So I want to ask, is it the case that the only difference is that previously you didn't have to go to prison, but now you do? Because you already have the power to require them to do that. It's now that senior responsible officers or board members will have to go to prison. Well, I am not concerned or worried at all. But what if some board members are unaware of the change and then they have to go to prison? Do we hear from the Hong Kong MA or let's hear from Mr. Ho. Thank you for the question. In relation to the requirements of the recovery plan requiring senior officers to be responsible, and failure to comply with requirements, these officers will have to go to prison. Is it reasonable? Well, that depends on. We're talking about the gravity of the situation. There are two standards. First, failure to implement the recovery may affect the bank's stability and viability. And if a bank is not viable, a possible outcome is that there will be large-scale losses suffered by depositors. So that is directly related to the general public. Two, if the bank does not implement the recovery plan, it may cause systemic implications which in turn affect the entire financial system and then cause a large scale of losses. And this is also a public event. Under the current banking ordinance, there are provisions setting out requirements if the incidents relate to public incidents. Well, when it comes to actual operation, it's rather rare. The provision states that when devising the recovery plan and in the process of implementing the same, a Hong Kong MA will have to have in-depth discussion with the banks. So the senior management or, well, the bank has a chance to tell us why there is no need to do certain things. And there's also a chance for us to explain to banks why we think they need to take certain actions. In most cases, we think we don't have to reach that stage before the problem is resolved. I think my question is not answered. Is it the case that Basel requires all banks to face penalty all over the world? Or is it the case that you just take the chance to add the penalty? Or is it the case that even without this ordinance, according to the Hong Kong MA, well, there will be penalty? And comparing the two levels, Mr. White?
I think the general point we'd make is that these standards are part of implementing the FSB's guidelines, and they have been implemented in comparable jurisdictions to Hong Kong. So in the European Union, under the Banking Recovery and Resolution Directive, you have very similar provisions for recovery planning that apply to all European Union jurisdictions. Similar requirements exist in more regional jurisdictions. For example, in Singapore, the MAS has also imposed recovery plan requirements on its institutions that it considers systemic in the event of failure. So from an international compliance perspective, we see this as broadly aligned. And in terms of the penalties, to reiterate, I think it's very important to make clear that the recovery plan is the firm's own plan to deal with crisis related to the operation of its own business. So it's very natural that the bank should be required to have plans in place to deal with crisis or to deal with problems that result from its operations. However, the recovery planning process is designed to facilitate an iterative dialogue between the banks and the authorities to ensure that the bank's own plans for managing crisis are well developed and can be used to ensure the bank does not fail in the event of a crisis. And the penalties are really there as a backstop provision in the most extreme circumstances. But as we've iterated already, many banks in Hong Kong have already submitted recovery plans. There has been a good dialogue between banks in Hong Kong and the HKMA, and those plans will continue to be refined over time. So I'd expect that to continue.
Actually, what I'm trying to ask is that whether the penalty now you are trying to propose is reasonable and also in par with other parts of the world. That's my question.
What we would say is that the penalties linked to recovery planning are broadly aligned with those in the banking ordinance and under the financial institutions resolution ordinance. So we've aimed to align the penalties with those associated with other prudential standards in Hong Kong. So that we don't see these as different from a failure to meet recovery planning requirements. We've attempted to ensure that the penalties are aligned with a failure to meet any other prudential requirement that applies to a bank in Hong Kong. And in terms of how that compares to other jurisdictions will also ensure that they enforce compliance with their regulations, and they take their own approaches to that.
So you mean they are more or less the same as other countries?
So that the requirements on banks are broadly aligned with those in other countries.
我哋對銀行要求係同其他地方嘅類似。我講個罰則啊，要求就差唔多一樣，罰則係咪都係一樣？係咪類似新加坡嘅呢個罰則
？Yes. Mr. Wright, would you like to clarify whether...
the Singaporean authorities will enforce compliance with their rules on their banks. I think what we would say here is that the requirements for compliance with recovery planning in Hong Kong are similar to the penalties for non-compliance of other prudential standards that apply to banks in Hong Kong.
So can you provide this committee the penalty for other parts of the world? For example, in Hong Kong, you are now proposing 5 years in prison. So how about other parts of the world? So can I have that kind of information later?
I think that means could you supplement in terms of a table, tabulating all the relevant penalties for other jurisdictions?
Because as you have pointed out, actually it is not something that you would implement suddenly. There's always discussion.
Yes.
There's always a plan there, and I don't think that would really happen, that we need to actually ask the bank, and I don't really think that the bank, for any reason, they would not execute what MA has asked to them to do so. But we need to, I'm more concerned about the liability of the directors, because they may not know. So I was asking whether you will have a system where you would notify all the independent directors as well. That's my core question.
Sure.
Okay.
Thank you, and we can certainly respond with a description of the penalties associated with recovery planning rules in other jurisdictions. I think to your point about directors, there's one of the requirements that the HKMA sets in its guidelines is that there is appropriate governance in place in AIs for the production of recovery plans. So once a recovery plan is submitted to the HKMA, it has already been signed off by the appropriate level of governance within each AI, and that typically tends to be at the highest level in the organisation.
Yes, but what it seems you still don't understand my question. My question is, of course, under the corporate governance, then the directors will make sure that the bank has such kind of recovery plan. But the question is, when the bank and the senior executive are very busy meeting the MA, they may not notify the independent directors. I'm saying, is there any requirement or any system in place so that you make sure that the independent directors are aware of the requirement from the MA, and then the independent directors can ask the senior management, make sure senior management would do what is required by MA. That's my point, okay?
Sure, and very quickly, for any direction issued by the HKMA to a bank, the HKMA has to issue that direction in writing in advance of any power of direction being imposed. So there will be a written communication of any planned action by the HKMA to the executives of the bank in advance. And a reasonable amount of time will be allowed for a dialogue.
Okay. 我知道金管局許主管想補充兩句，麻煩你。
Mr. Hui would also like to supplement. I'd like to supplement here. When we vet the persons who are seeking to become the director of a bank, we would require these directors to be familiar with the ordinances which govern the banks. We have a requirement that the director should know very well the operations of the bank and the compliance requirements. Since this is an important ordinance, we will require the directors to know this ordinance. But how would they know? We expect that the bank would brief the directors, and also after we have vetted the qualification of the board directors of the AIs, the bank may organize, training sessions for the directors. And whenever there are any updates on the compliance requirements, then we will require the bank to explain them to the directors. The MA has also started some training programs. My third question. Now, as a former secretary of the board of a bank, well, if you have an important letter from the MA would require that the bank must circulate that letter to all its directors. So if the MA strictly enforces this, if the bank MA believe that this is very important information, then the bank, it would say in the letter that the letter should be circulated to all its directors. I believe this can ensure that all the information will be disseminated to all the directors. But I don't know how the MA enforces that. Under what circumstances would they require that letter to be circulated to all directors, and which are those which do not need to be circulated? Mr. Chen Kin-po, regarding Mr. Chen Kin-po's concern, when the ordinance comes into effect, you should inform the banks so that the bank will circulate all these notices to its directors so that the directors will not miss out. James To. Well, I don't think they have answered all the questions. Okay, it's okay if you can promise to give us a table, but could you also give us a range? Have you looked at have you find out whether in other advanced jurisdictions the penalty is lighter, and are there any examples of jurisdictions imposing, tougher penalties? Mr. Chen Kin-po quoted Singapore, but I don't know, because Singapore is very, very draconian. So I would like to know about the penalties in other jurisdictions. Let's see what the range is. What is the most lenient to what is the most stringent? The chairman had also helped us, understand the picture. Mr. Chen was saying that what happened to the director don't know. They may be put into jail. Now, if the MA were to issue an order for a recovery plan to be implemented, you may send the notice to all the board members, but in the end the directors may still don't know. Maybe the bank is in a very chaotic situation, and the bank has failed to circulate that letter to one of the directors, and the director say, I don't know. And even if he knew, he may immediately resign. Then, if all the other directors have resigned and there's only one remaining, and then he will be the sole person held liable when all the others have resigned. If the MA has a list of all the directors, the bank don't have that many directors. Why don't you directly send out your notice to all the directors? Would that be too harsh a requirement for such crucial, information? Touch wood, this doesn't happen frequently. So, of course, normally you can ask the secretary to circulate your letter to all the directors. When it comes to such a serious scenario, what can the MA directly, notify the directors? You don't need to put this into the bill. Can you? And may not require you to, inform the directors individually. So, okay, Chairman, perhaps I can now put all my questions to the administration so they can, answer them together. If in such a crisis situation all the directors resign, what happens? Would you also require that certain persons are not allowed to resign? In a crisis situation, all the independent or executive directors may all simply resign. But what about the managing directors? They may also resign. So in your plan, would you require certain people would not be allowed to resign in such a scenario? Let's deal with this question first. Thank you, Mr. To. I'll try to answer your two questions. First of all, regarding the penalty, we must stress that the recovery plan is a very important plan. Its purpose is to ensure that the bank will not be unable to cope with a serious stress situation thus affecting the financial stability of Hong Kong. So this is a very important step that must be taken. Given the importance of the plan, we believe that there should be penalties which are commensurate so that we can effectively enforce the system. When we, formulated the penalties, we've already made reference of the penalties provided under the banking ordinance and the financial resolution ordinance and the penalties therein. We've also looked at the penalties in Singapore, the EU, and neighboring jurisdictions to effectively implement the requirements of the FSB. Other than providing statutes to lay down the requirements, more importantly, there should be a set of penalties that is commensurate with the gravity of the situation. So we've made reference of the practice in other jurisdictions and the penalties under the relevant ordinance in Hong Kong before we came up with this proposal. Of course, the FSB is not saying that the penalties should be standardized among all jurisdictions, because in different jurisdictions the situations differ. Say, for example, in the States, they may impose a penalty on a single bank where the fine could be very huge, but does Hong Kong have to follow that? So I think we have to look at the conditions, the circumstances of the market and the bank concerned. So I'd like to stress that based on the spirit of good corporate governance, the senior management of a bank should bear a responsibility. Under the company's ordinance, the responsible person, if he breaches any of the requirements, he will also be punished. So this is a long-standing principle which has been enforced for a long time. I also like to thank the chairman for the reminder. When the MA enforces these rules, we will ensure that in the course of formulating the recovery plans, we would ensure that the whole management would have looked at it and indicate that they're satisfied before we accept the plan. Mr. To's second question was whether all the directors will resign. No. So would the MA consider sending letters directly to the directors rather than going through the bank? I think what the chairman suggested would already be a very, very effective. For such important plans, I'm sure the board would have the opportunity to discuss it. Why don't you, give us a written reply on this point, right? Directly write to the directors. Yeah, we can certainly go back and consider this. Well, I don't want to, move amendments to your proposal. This is a plan, and then it's very odd if we add a provision saying that you will notify the directors one by one. But if it is your part of your operation, then I will accept that. I know, but this will have far-reaching implications. Some colleagues already said that it's not fair that senior management directors should be put to jail if anything should happen. I'm not a banking director, but still, I think you need to strike the right balance here. Why don't you go back and think about it? If you say that this won't work, please tell us why. Well, I guess that we will not be able to finish the scrutiny of the bill at one meeting. I understand that the MA would have ways to contact each of the directors. Well, how they're going to do it is something else. All right, let's tackle the third question, the concern that directors may resign. In Hong Kong, we always stress on the need for good corporate governance for banks. In the course of supervision, the MA would ensure that we have a regular dialogue and that the compliance requirements are clearly communicated to the banks and that they are properly implemented. in the recovery plan, when we prepared this plan, we've listed the different scenarios and the different persons to be responsible. There is already a very good mechanism there to ensure that serious incidents will not happen. The whole purpose of the plan is prevention. So we hope that with the recovery plan in place, the scenario Mr. To suggested would not happen. That is, when something happened, all the directors would resign. But I must also emphasize that for a huge, large-scale bank or AI, it shouldn't rely on one or two persons to make all the decisions.
The formulation of a recovery plan is in relation to the entire AI. We have to ensure that there is a good governance and a good system to support it. But perhaps you can answer me this. Are there people under the plan that cannot or are not allowed to resign? Well, you said to ensure, but they are only words. And if they said, well, I may go to prison, I'm going to resign. Is that the case? Because there is a hierarchy in the plan. Say, for example, 5 people who make the decisions, and if these 5 are died in a plane crash, there will be the other 5. And if you don't have the other 5, then there will be a problem. Say, for example, you can take over. Mr. Ho will be the senior officer of the bank, or you can appoint someone to take over the bank. You explain to me, please. Let me try, and then I will give you a written reply. Well, sorry. I know it is a very tricky question, and it's quite piercing, my question. You can't just answer me in relation to a general case. It's meaningless to have another meeting. Well, you talk about penalty, and you said yes, that they are in line. Yes, well, you can tell us if they are in line with other legislation. Well, or is it the case that other jurisdictions, the penalty is 2 years, but we have 5? Well, I'm not going to stop you if you just give me a general answer, but that is not my point. Yes, Mr. To, your question is a very good one. In relation to responsible person, under the recovery plan, we require that when every stage is triggered, there will be a responsible person. And it is clearly specified in the recovery plan who this responsible person is. When something happens, say for example, this responsible person is not there, for some reason, then the AI will have to appoint another responsible person. So it won't be the case that no one is responsible. Don't worry. We ensure that in every stage, in every area, there is a responsible person. Okay, you give me a written reply. Perhaps you will do some preparation and you give us a written reply, and we'll see how we can follow it up in the next meeting. No, well, if A is not there, there'll be B, and there'll be C. Well, what if all board members have resigned? There won't be any board meetings. Please answer me that. Well, do you say that we will appoint board members under the banking ordinance? Well, then that will be your answer. Mr. Ray Chan, last person in the first round. No, well, third round. Mr. Kenneth Leung. I want to follow up on what Mr. To asked.
Further thought, because of course I think the Honourable Chan Kim-por and Honourable James To have already required some comparative table between the various jurisdictions concerning criminal penalty for failure to devise and or implement a recovery plan. But I need specifically to ask you to give me specific, penalty regimes for a number of jurisdictions, including England, Australia, and sorry to say, Singapore as well. In addition to what Mr. To requires, I specifically want to see what Australia, England, and Singapore are doing regarding the penalty regime, concerning recovery plan. 主席，第二個問題呢
My second question is about criminal liability. I don't need a comparison of different jurisdictions. However, well, yes, I know that it's not really a comparable situation, but I would like to have a comparison amongst different legislations in Hong Kong. Say, for example, using the recovery plan regime, vis-a-vis insurance companies, and authorized trustees of mandatory provident fund. If their board directors fail, well, because of negligence or otherwise, to devise a plan to rescue the company, I think this rescue plan may not be a direct comparison. And if the board directors fail to devise a plan to ensure smooth operation of the company, i.e. the trustee, MPF trustee, or the insurance company, rendering it in receivership. So because of negligence of directors resulting in insurance companies or MPF trustees into liquidation or winding up, are there similar penalties or criminal liabilities? Can you give me a supplementary information before the next meeting? So 2 questions. Mr. White's question, I think it's for you to supplement information of the 3 jurisdictions, and I don't know if you want to add anything, Mr. White. Otherwise, I will ask if the FSTB would like to supplement. I can give you an answer in written form. But we have to go, we have refer to different legislation, say, for example, the banking resolution. FI resolution ordinance. If there are similar penalties, how they compare with this one. As my colleague said that, of course, we need to make a comparison amongst the different jurisdictions. But before we introduce a bill, the DOJ will look at if the penalty is proportional. And we do this every single time. And we are very careful. We won't arbitrarily set a level of penalty. We will make sure that the level of penalty won't differ much from other pieces of legislation or other jurisdictions. But yes, Mr. Leung's point is valid. We will provide more information to help you understand why we set it at this level. Well, I want to say that it's after careful thought and full consideration before we set this level of penalty. Well, if after numerous procedures the AI still fails to do something to ensure stability, of course the Hong Kong MA will have the final power to make sure that the plan will be implemented for a sole purpose, which is to ensure financial stability. Mr. Chan Kim Po? The Hong Kong MA has explained very clearly that as an INED of banks, I know that there are very stringent requirements, and you have to attend many courses, CBDs. So the Hong Kong MA's subject senior officers or INEDs of the banking sector to very stringent requirements. I do think sometimes it's excessive, but it's necessary. INEDs have the same responsibility like other board members. They have to be fully conversant with the operation of the bank, aware of the latest requirements under the law. It's rather impossible that an INED doesn't know about the formulation of a recovery plan. But there are also some individual INEDs that don't really know about their responsibility. Well, I think the chairman's point is rather valid. It can be by way of a guideline. It doesn't really have to be written into the law. I do believe that all board members know about it. Because if they don't know, then there is problem with the senior management or the board. If something big happens and the board members will have to ask what is going on, that is not ideal. Yes, it may be a once in a blue moon that an INED doesn't know what is going on. But there are some individuals that are quite lax about their duties. I say that you should not rely on the person, but rely on the procedure to make sure everything is in place. I don't think it's necessary to write it into the law. It can be by way of internal guidelines. I know very well. Well, as an INED of in the banking sector, I know that we have to do more than Basel requirements. So we are super sound. Well, there is just too much compliance to do for senior management of the banks. The operating environment in the banking sector is already tough. Say, for example, you have been adding more and more requirements to the accounting sector, and there'll be more and more legal requirements. While you add to legal requirements, will you dispense with or remove obsolete requirements to make sure that you move ahead with the times? But it's just like a shelf of goods. You keep adding without taking anything away. Say the insurance sector, apart from regulation, you need to assist the development of the sector. It should be dual track. You don't just add. You have a brake to move the vehicle along, but you have a brake to stop the vehicle, but you need accelerator to propel it. Otherwise, it will disappear. So it's written into the law that the authority will have to assist the development of the sector as well in relation to the banking, to the insurance sector. So you do need to assist the development of the banking sector instead of just keep adding more and more requirements to stifle its development. Mr. Ho from the Hong Kong MA. Thank you. Mr. Chen has made a very good point. There are some obsolete provisions. They have to be updated or repealed in the banking ordinance. Our proposal this time include limitations of financial exposures. They are not in line with international standards, so we take the opportunity to update it. Well, we have an annual exercise to go through what provisions have to be updated. Mr. Chan draws our attention to this fact. Whilst ensuring financial stability, we have to ensure smooth operation of the sector. We're aware of it. When we formulate rules and in our internal discussions, we always mention that we have to understand the operation of the market. And we have to ensure that there is a safe environment for banks to operate. That indeed is a very good reminder, and we always keep in mind this fact. Mr. James Toh, speaking for the third round. Well, you will give me an example of the plans next time. Well, these plans, does it include, say, a shareholder or major shareholder of of the bank. They have to you make available his personal wealth. Say, for example, if the bank is under stress and you will have to sell your assets or have to call back loans to save yourself and save Hong Kong. I understand that. You can't resist that. Well, if the shop is valuable to me and you now ask me to sell it.
My question is that according to your plan, you say that the bank has a recovery plan. If in a serious situation, would you require the major shareholders to inject capital, say $1 billion into the bank using their own assets? Don't let the bank, go down. You've been earning so much from the bank. You should inject, $1 billion in the bank to make sure the bank will not collapse. Do you have such a requirement, or is it that in the plan is it that you will not require them to inject their own personal assets to salvage the bank? I didn't say whether this is the right thing or wrong thing to do, Mr. Wright.
Thank you. So the guidelines and these rules do not require firms to include specific recovery actions. Instead, because this plan is the firm's own plan, the requirements set out that the bank should propose a range of actions to deal with different kinds of stress. But the example that you mentioned is a very good one, and that it is likely that, it would be likely that many banks might consider an additional capital raising exercise as a potential appropriate recovery action in some scenarios. However, it's likely that firms would also consider other actions that may not be so dependent on shareholder appetite to inject further capital. So we would expect that firms would have other actions in their recovery plan to deal with scenarios where capital markets were unwilling to invest additional capital. So we would expect that would be a possible action that many firms would propose in their recovery plan, but we'd also expect, I think, a wider range of actions to be considered to deal with circumstances where the capital markets were unwilling to provide more capital. This could include an example you mentioned earlier around asset disposals, could consider their commercial strategy over the coming months or years, and could also consider other actions that would improve their capital and funding position.
That means only one of the possible option, but not mandatory in nature. Right?
None of the actions, the HKMA does not mandate actions to be included in banks' plans. Each bank needs to develop a plan that's tailored to its business, and every bank's business is different. So the range of possible actions that would be available to a bank to improve its capital and funding position will depend on its business model. But for publicly traded banks, I think it's a fair expectation that at least a bank should consider how they might raise additional capital in response to some of the stress scenarios the HKMA would expect them to be able to provide some actions to deal with.
Okay. 我知道金管局許主管都想補充兩句，唔該。
Madam Ho would also like to supplement. In vetting the recovery plan to see whether or not it is feasible, we would look at it comprehensively. Mr. White already said that there could be different contingency plans. The bank may dispose of its assets or deleverage, or it may raise new capital. So we'll see whether all that is feasible. When the bank formulates the plan, for example, asset disposal, there's a limit to that, still not be enough. In that case, the bank will need to, bring in new capital. The bank will need to talk to the shareholders. That is, when the bank is in such a situation, would they make a commitment to make further cash injections? If the shareholders is unwilling to do that, you can't force them. But the bank then will need to be prepared so that when it is really under stress, it would need, to consider where it's going to raise new capital. It may need to find new investors or come up with new tools to raise new funds. For example, Many banks in Hong Kong may have a parent company in another jurisdiction. We now already require the parent company to. That is when the bank in Hong Kong is under stress, it's still not able to cope after selling its assets, would require its parent company to provide some cash or assistance or loan to this bank in Hong Kong. So we certainly will look at that. Will not require the bank to ask a particular shareholder to come up with some cash. We would ensure that the bank will have enough assets to ensure its viability. Well, I think this is a very important point. Could you, could you give a written reply to this question? Of course, the bank may be under stress because of market rumors. Whether the major shareholders would salvage the company and so on, I understand. But my point is whether or not the minority shareholders would be affected. Of course, the minority shareholders would not be able to help in such a situation. I mean, most of us would hold some shares of banking institutions. So I mean, it's quite possible that I may be asked to chip in. Of course, that's not reasonable. Only major shareholders can contribute to salvage the bank. The point is, how much commitment should come from the parent company? What about the major shareholders? If they indicate that they're willing to inject capital, but in a stressful situation, the shareholder himself may be in trouble himself. So does it mean that the major shareholder, there may be 3 or 4 major shareholders, would require them to sign an undertaking beforehand that if the bank, should encounter such a stressful situation, if the liquidity falls below a certain level, they would undertake to inject, new capital. So how detailed would your requirements be in this regard? So, in other words, you're talking about, requiring this commitment from the major shareholders. If the major shareholders refuses to make a contribution, then you say you'll not approve the plan. Then the bank would have failed to comply. Then the bank would lose its license, and that would indeed be a crisis. If nobody is there to save the bank, then the bank may collapse. So I hope in your written reply you could, explain in detail at what stage would you make such requirements. Let's see if there are any further follow-up questions. If not, I'd like to go back to the point about public hearing. I think the industry has been consulted already, but 2 members suggested that organizations like the Consumer Council, should we invite them to a public hearing. I think the administration already said that we need to implement a recovery plan. There would be a communication plan. You may need to inform the public or to let people know what is happening. So it's not purely something internal to the industry. So perhaps at our next meeting, like Mr. Kenneth Leung suggested, we can allocate the first hour of our meeting to come and invite the major banks and relevant stakeholders to come and give us the views. And then the administration may respond to the views they submit to us. And today we've asked the administration to give us written replies to several questions. At our next meeting, we can follow up on those replies or responses. So as for today, I don't envisage we'll be able to complete the scrutiny of all the. Oh, you want to? Okay. You want to listen to the reply first. Well, some members believe that we should first, do the inquiry first, the public hearing first before we start the clause by clause. So why don't we first set the date for that meeting? Because I have to allow you time to prepare your documents for us. Depending when your papers are ready, only then can we set the date for our next meeting. And I also welcome suggestions from members as to which organizations or banks we should invite to come. The MA can also consult the Banking Association of Banks. I don't think we need to invite all the banks. Just a few representative banks would do. Mr. To. I think they can also, reply to this in writing. At the beginning, we're told that the banks would give them, suggestions in respect of the technical aspects, and they've already dealt with that. I'd like to know what are these technical, comments. Yeah, which are the inputs that you've received from the banks, and you've already dealt with those? For example, originally you proposed imprisonment of 10 years, and now you've, because of the concern, you've lowered it to 5, for example. I may be unduly worried here, but I would like to ask, in your recovery plan, would you also cover core loans and also the prescribed limits to exposures? From the general public's perspective, let's say if I borrow some money and the bank will need to call loans, but my loan is for a 10 or 15 years, and I can't repay you immediately. I may be forced to sell my property. So your plan should also include deleveraging. You shouldn't allow the bank to lend so much. So if the bank needs to deleverage, which are the loans that they should deleverage? Of course, if you made a loan to somebody and there is a deposit, then you can, of course, offset the two. But what about people who are on mortgage? They don't have any cash as deposit for you, and you call loan and they are asked to pay back several $million. Then you may say this customer can, remortgage with another bank, but that would take time. So could you tell us what would your arrangement be in such a scenario? I understand that the mortgage loans that we lend out will be treated as the bank's assets. Right. If I may sum up the information that we require of the administration. Well, Chairman, I say this because let's say I've borrowed 60% of the property price, and like in the SARS epidemic, property value dropped by 50%. And then, so the bank may need to call loans for the supplementary information other than the 2 points made by Mr. To. Mr. To is asking for a sample recovery plan, and secondly, a table to compare the penalties in Hong Kong vis-a-vis those in other jurisdictions like UK, Australia, and Singapore, as suggested by Mr. Kenneth Chan, and whether or not the MA is willing to, in certain circumstances, directly write to the directors. And regarding resignation by directors, again, do you have any requirements to ensure that you can protect the interests of the banks and the public? And also comparison with similar legislation. For example, the Insurance Companies Ordinance, the trustees of MPF, and so on, a comparison of the penalties under those different ordinances. And finally, is it a necessary option for shareholders to inject capital in the event of a crisis? Should they be required to sign an undertaking beforehand so that the bank will have, a source of funds to deal with the crisis? So these are the 8 areas which we like the AMA to provide supplementary information. I think this will take time. let's wait until the information is ready, and then we can make an appointment for our next meeting. Right. Do members have any other questions? If not, thank you very much. We'll see you again at our next meeting. Thank you.